So the WNBA offered a new deal to players where they'll get paid up to 4 times more. So, for example, a star who was making 250,000 a year could make 1 million under the new deal. So it sounds like a win, but the player said no thanks. So with the players saying no thanks, let's get into the article and then I'll give you guys my opinion from a business perspective. Then I want to get you guys' thoughts down in the comments below. So the article reads WNBA CPA negotiations from rev sharing to potential lockout. So we knew going into this WNBA season that the league's collective bargaining negotiations with the players would be one of the most important issues in 2025. With no deal in place ahead of the current collective bargaining agreement expiring on October 31st, it has become the single most important topic. And during the WNBA All Star weekend in mid July, the players put the focus squarely on the CBA. Players describe a meeting with Commissioner Kathy Engelbert, an ownership representative in Indianapolis, as being a missed opportunity to come closer on terms. Before the July 19th All Star game, players wore Pay Us What You Owe Us t shirts. During warm ups, fans chanted in support of the players after the game, but the move got some criticism too. Even retired WNBA legend Candace Parker said during her post moves podcast with the Indiana Fever's Aaliyah Boston that it wasn't a great look for the players to wear those shirts and then give little to no effort during the game. Boston countered by saying that with so many games on the schedule and short recovery times, the players didn't need to play hard in the exhibition because they are giving so much in the games that matter. Meanwhile, Engelbert has stayed on message with mostly positive platitudes, guiding the management slash ownership response or lack thereof that isn't focused on public perception. Will the sides move closer over the next few months? ESPN looks at what we learned to this point about the CBA negotiations and what could come from them. All right. So it says, what are the players' biggest priorities? There are several, but the most important is revenue sharing. How it's determined and whether the percentage will be allowed to grow during the course of the CBA and not be a fixed number for the duration of the deal. And it says in quotes, the players are still adamant that we get a percentage of revenue that grows with the business, which perhaps includes team revenue, and that's just part of the conversation. WNBA Players Association President Nika Ukumaike told ESPN. So fans are used fans are used to salary caps for NBA NFL teams being set based on percentage of what the CBA describes as basketball related income or BRI. By contrast, the WNBA's current CBA defined the cap for each season ahead of time with modest 3% annual raises. A mechanism in the CBA that would increase the cap based on revenue was effectively invalidated by the timing of the deal because the current CBA began in 2020 prior to the COVID-19 pandemic. Revenue targets were set based on a previous campaign, 2019, and made cumulative over the life of the deal. And the league made no money off ticket sales during the abbreviated 2020 season, played on the IMG Academy campus in Bradenton, Florida, and attendance was also limited in 2021 by local restrictions. That made it unrealistic for the targets to be met despite the league's increased attendance over the past 2 seasons. Per Ugumaike, I think that's how you say her name. Yeah, Akumake, there we go. The WNBA's latest offer to its players while dramatically increasing the salary cap and maximum base salaries, which a league source suggests could quadruple to at least 1 million from their current 249,244 dollars, follows the same model as the current CBA. And this is what Okumake had to say. It's basically the same system that we exist in right now, Okumake said. They're proposing a system that includes revenue that would grow with the business. When you approach it from the perspective of their response to our proposal, yes, money is more, but ultimately, if you look at the growth of the business, the money relative to the percentage of everything is virtually staying the same. And the players see the astonishing leap in franchise valuations. The Las Vegas Aces, for example, were purchased for $2 million in 2021, but are now valued at $310 million. And the New York Liberty were purchased for between $10 million and $14 million after being for sale for more than a year, and now have an estimated valuation of around $450 million in the past couple of years, and question if they're getting their proper share of that growth. On its face, that's a reasonable thing to ask. But what about the NBA's claim for years of subsidizing WNBA losses? Will the NBA say the new money is in part backfilling past deficits? Could it prove that? And one of the most difficult parts of following the WNBA's labor negotiations all these years has been getting firm numbers from the league side of things. The players have said they don't always feel like they get that. By the same token, the side we do hear much more from during every CBA is the players in their union. There has been a dramatic change in the WNBA and what that indicates for the future in a short period of time after many years that seemed stagnant. The popularity of 2024 number one draft pick Caitlin Clark has been an enormous boost for a league that had clearly started to turn the corner toward real growth over the past 5 years. If that league continues as expected, it's understandable the players are concerned about how their part of the pie grows too. And this is Akumake, she says we're seeing an expansion and the players are just saying, hey, let us have our fair share of that. Akumake said sometimes that means proposing something new that makes sense for the time. Not really new, new to us, not to other leagues. So, with all of that being said, I want you guys to see what Satu Sabali had to say, and then I'll give you guys my input because this is what she had to say in regards of rejecting the four-time
I think
salary.
we can focus on our players in the union. We got a proposal from the league, which was honestly a slap in the face, and I think we really have to put an emphasis on the players that are in our league right now. But I love to see the league growing. I think adding these teams in Philly and Detroit, like that's how amazing is that the league can grow. But how cool would it also be to have like a little bit expansion on the rosters. Like, let's focus on the teams that have everything set up right now, and maybe focus on the teams also that find excuses continuously to lack investment into their players before we focus on adding more to the grain of people that can't really be sustained. I think we can
Adding more to the grain to the people that can't really be sustained. She lost me with that one. But anyway, it was a flashy offer with no real change behind it. Think of it like this. Imagine you work at Amazon in a warehouse and your boss says, we'll give you a $5 raise now, but no more raises. Even if Amazon makes billions more next year. That sounds unfair, right? But that's what the WNBA did. They offered players a raise, but they didn't fix the broken system that keeps salary low no matter how much money the league makes. And the players actually want revenue sharing, meaning they want a percentage of the money that the league earns, like NBA players get. So I'll give you another example. Let's say you and your friends sell a pizza for $20. You make the dough, you baked it, and you served it. But at the end, you only get $2, while someone else who didn't help takes $18. And that's how WNBA players feel right now. So NBA players get around 50% of league revenue, and WNBA players only get about 9 to 10%. So even if the WNBA grows and makes $500 million, players still only get a tiny slice of the pie. So you may ask, but isn't the WNBA growing? Yeah, it's growing and fast. The league made 200 million plus in 2023, and there's a new $200 million a year TV deal starting soon. And then you have Caitlin Clark, who basically brought all the advertising and stuff together with her brand spreading love and being very family friendly and very people friendly of a marketable person as she loves her team and she has family support and things like that. So let's say, for example, right, when it comes to growth without reward, let's say you help build a lemonade stand, right? And this is the growth without reward example I want to give you. And at first it makes $10 and you get $1. That's the 10%, right? Later it starts making $100,000, but you're still getting $1. Wouldn't that be unfair? So that's how the players feel. They're driving huge growth. Well, really, it's only Caitlin Clark, but they feel as though they're driving huge growth, but not seeing any real share of it. And they use their platform at the 2025 WNBA All-Star Game. Players wearing the "Pay Us What You Owe Us" shirt, and they're not just asking for more money. They're asking for a system that's fair, one where the salaries grow as the league grows. So when you look at everything, to break it down simply, the WNBA offered a big salary raise like 250,000 to 1 million, sorry, 250,000 to $1 million. But players said no because the deal didn't fix the real issue, and right now they only get about 10% of league money while NBA players get 50%. So imagine building a company that grows big and you still get paid like it's small, and that's what's happening. So instead of taking a quick raise with no changes, players want a real fair system that grows with the league. So if I were a WNBA player, should I take the 4 times deal? From a business perspective, yes, taking the 4 times the salary feels like a win right now. If I'm making 250,000 and they offer me 1 million, that's a huge upgrade. But here's the smart question. Is this raise just a short-term bribe to stop me for fighting for real financial power? Because once I take that deal, the league can say, we gave them more money. They good now. And that kills all momentum for bigger change. So let's say the WNBA makes 200 million now and 500 million in 5 years. If I take this 4 times salary deal, my pay stays fixed at around 1 million. But the league, they get to keep the extra 300 million. And that's bad business for me as a player because if you look at it, it's like owning 0% of a booming startup and just agreeing to a fixed salary and you helping building a gold mine, but you never see the gold. So when you really look at it, when it comes to equity, is always better than a bigger paycheck because in smart business, wealthy people don't just chase high salaries; they chase equity and ownership. So NBA players get 50% of league revenue, which is the equity mindset. But then WNBA players currently get 10% or less. And the 4 times deal offer a salary increase, but no equity change. So if I take the deal, I'm choosing a bigger paycheck today over a share of the company's success tomorrow. And if I'm building this brand, let alone my brand with the franchise and using their platform to also market myself to then build myself up to have a franchise and make my own money when it comes to whatever my business is, minding my own business outside of the court, off the court, with my talent and my image, why shouldn't I share in that growth? Right. So if I take the deal, I'm signing away leverage. And future negotiations become harder because you already accepted this. So why are you asking for more now? That's like selling your car too cheap and then trying to raise the price after the buyer already drove off. So from a negotiation standpoint, it's better to hold the line down, even if it means less money short term to secure a better system for me and the players after me. So look, yeah, I could take the money and feel good for a year or two, but this deal doesn't change the system. It still keeps the league in control of how much I make, even if the league becomes 10 times richer. And I'm building their brand, selling tickets, and growing the business, growing the audience. Why would I settle for a one-time raise when I could negotiate the system that keeps a real percentage? That well, why would I settle for a one-time raise when I could negotiate a system that gives me a real percentage of that growth forever? And also, I'm not going to rely, obviously, being wise on the league and their brand to just make me richer. I'm going to build my own brand on the side, minding my business. whether that's a podcast or whatever the case may be, which is a smart thing to do because you also want to be marketable off the court as well because then it opens up more sponsors. But that's the smart business move. And I don't want to be a high paid employee. I want to be a true stakeholder in the success I help build. So, no, I wouldn't take the deal. Not without structural change. I'll fight for a revenue sharing model, even if it means smaller pay now, because that gives me a future. That gives me and future players a real seat at a financials table as the leagues grows, right? And look at it like this. I'll take it a step further. Let's say, um, let's talk about retirement, right? Because WNBA retirement benefits is totally different compared to the NBA. The WNBA's retiree benefits are more limited because the league is younger and has lower revenue. So what you may get after retirement when it comes to your pension plan, the WNBA has a pension plan for players who played a minimum of a minimum number of years, usually 3+ seasons. So monthly payments are based on the years of your service, but nowhere near NBA levels because in the NBA, if you want to be technical, when they retire in the NBA, for example, a player in the NBA that has 10 years of service could receive around 8,500 a month or roughly $100,000 per year. And then when you look at the WNBA is lesser, so they'll be getting around $1,000 to $2,000 a month at most in the WNBA compared to the NBA. So when you look at all of those things, what if you don't what I was going to say? What you don't get if you say no to the 4 times salary bump is if you say no to the big salary bump, here's what you may miss out on the short term. You can make $1 million a year for 3 years and that'll equal $3 million total, but you said no and it made only 250,000 a year, and that's equals 750,000 total. So you lost 2.25 million in cash during your prime playing years, but why that might still but why this might still be smart long term is what I'm saying is because if you say no and instead push for a better collective deal, here's how it can pay off bigger, not just for you, but for every WNBA player after you because you help secure revenue sharing. So future players, including yourself, could make more than 1 million, could make more than 1 million consistently, not just temporarily. So now you created a system that allows salaries to grow with the league. And then you can push for better pension benefits. So if your fight leads to higher league revenue and player earnings, the pension system will get stronger because based on your years of service and the more money that's being put in, because now you have the league revenue, you have secured the revenue sharing, you'll get more when you do retire in your pension monthly. So future retirees could see bigger monthly checks like NBA retirees do. I'm not saying it's going to be exactly the same as NBA players, but it's going to be more than 1,000 to $2,000 a month. So you leave a legacy that builds the league. So saying no now could lead to equity, media profit shares, or bonus incentives later. So you're not just playing for a check. You're shaping the financial foundation for women's sports. So let's say you're building a company. Employee mindset, you'll think, pay me 1 million now. Founder mindset is pay me less now, but give me a percentage of future growth. So by saying no to the 4 times 4 offer, you're acting like a founder. You're taking the risk today to build value for yourself and others over time. So now I want to get to how the WNBA can adjust to build long-term value, right? Because you may ask, from a business standpoint, the WNBA has ran at a financial loss for years. And most of its recent boom in ratings and revenue is directly tied to Caitlin Clark and it being a whole new wave of marketable talent. So now the big question is, and I say is, what can the WNBA do from a business standpoint to turn this short-term hype into long-term investable value? So when you really look at it, they need to shift from salary cap thinking to revenue growth strategy. The problem is the WNBA operates with a protect the budget mindset instead of grow the pie. So to fix that, adopt a performance-based revenue sharing model where salaries grow when the league grows. So I'll give you an example. If the WNBA brings $300 million next year, players should automatically get a percentage of that, say 20%. That motivates players to promote the league, teams to innovate, and media to buy in. And this ties compensation to actual growth and reduces player resentment. But these players also need to get their act together and be more professional. That doesn't absolve them from that. So another thing is when it comes to locking in long-term media rights while leverage is high, because the problem is media deals in the past were undervalued in short term. And the thing is, they're capitalizing on Caitlin Clark, which is the fixed stardom now, to sign a longer term, higher value national TV streaming contract, even though Caitlin Clark has been injured and ratings been going down. I did a video on that. You can go check that out. I just did that recently. But similar to how the NBA secured long term ESPN Turner deals in the early 2000s. Because if you look at it from a bonus strategy, include player revenue sharing from media profits like the NBA does. And then you have to build star centric marketing and merch infrastructure. When Michael Jordan was in the league, the NBA was booming. When Michael Jordan retired, ratings dropped, but then they were star centric, so they shaped it around the Kobe and Shaq era with the Lakers, and then they went from there, right? So it went from Michael Jordan, then you had your Larry Birds and your Magic Johnson, and then you have Kobe and Shaq. So the problem is the WNBA avoids heavily marketing individual players. So they need to lean into the face of the league concept. You got Kaden Clark, Aja Wilson, Angel Reese, whatever, etc. Should be everywhere. In shoes, commercial, video games, and merch. People don't buy leagues, they buy players. And that's what this league fails to understand, right? So, and then also the league is still partly owned and managed by the NBA. And you may ask, where is this money coming from to offer this times for a salary bump? Well, obviously from the NBA funding it. But the thing is, it limits the independence and growth incentives since they're constantly being owned and managed by the NBA. Because the fix is open the league further to private investors, cities, or even player ownership groups who can inject funding and take risks for innovation. For example, I think it was stupid and ignorant for Kathy Engelbert to reject not letting the Connecticut Sun relocate to Boston and letting the investment pour in. So, for example, if Caitlin Clark or her reps invested in a team like Tom Brady did with the Las Vegas Aces, you'll unlock celebrity capital and long-term investment. And then also consider an expansion in strong sports markets like Nashville, Toronto, Philadelphia, the Bay Area. Boom. So when you really look at things, when it comes to creating legacy wealth tracks for players, the problem is the WNBA players currently leave with limited financial security. So to fix that, add player equity options such as lifetime licensing deals, ownership percentage in team stock, retirement bonus tied to league revenue at the time of exit. And this keep players invested in the brand long after they retire. And then they need to fix the scheduling and visibility issues because the problem is games compete with the NBA, MLB, and often aren't on accessible channels. So to fix that, make WNBA a summer league, May to August, to avoid NBA overlap. Secure YouTube, Amazon Prime, and Netflix streaming deals and mandate primetime coverage on marquee matchups. Make it easy and exciting to watch the WNBA to boost ratings and advertiser interest, right? So that's a smart way to go about it. So when you look at all of these things, right, and I say all of these things, I had to sit here and ask myself, and I know you guys may be asking, right? The question may be, um, what what is the smart move for both the WNBA and the players so everybody wins no matter what? Because if you really look at it, if the league regress, how would this deal still be worth it? right? If the WNBA regresses, if ratings drop, if the hype dies down, because it's dying down right now because Caitlin Clark is injured, has been out for a while, would this four-time salary deal still be worth it for players? So, yes, for the league, but maybe not for the players. And here's why. Because for the league, the deal is a lock-in win. If the WNBA locks players into a flat four-time salary deal without revenue sharing, and then the league starts losing money or momentum, the players still get the same fixed salaries, even if revenue falls. That means the league keeps all the upside if it grows, but the players take all the risk if it doesn't. And that's not a true partnership. That's just an employee deal. And it's great for the league because they cap their long-term risk. They get players to stop pushing for equity, and they can restructure again later if things collapse. Now, if you're betting on hype holding forever, we already seeing how that goes right now because Caitlin Clark is injured. I think that's self-explanatory. So the salary was high for a while, and now we're seeing that Caitlin Clark is injured, has been out. Then now you see the league is being challenged. They need to restructure. That's why I say what they need to do in regards of continue to have money pouring in and become profitable and self-profitable on its own to even substantiate the point of even giving these players more money, because to be honest, the NBA has been backing and subsidizing this league for so long that we need to find a way to substantiate more money coming in, let alone to pay these players, and then also get the players to have better benefits in turn after the business is set and restructured to profit and thrive and not be so dependent, right, on Caitlin Clark or the NBA. So if the league shrinks, here's how it will play out. Teams start cutting costs, players get waived more often, roster size shrinks more. I mean, it can't get shrink is shrinking more than ever now. It's shrinked. But owners push for a new CBA, and that big four-time salary deal could get renegotiated again. Right? Revenue dries up, no media deals, no cash flow, equal pay cuts. So you're getting a big bag today if they did say yes, but no real security if the market collapses. So look at it. A smart way to look at it, if you're a WNBA player, this deal might look sweet now, but if the league falls off, and let's be real, hype fades fast. You're stuck with a big paycheck and no leverage, and the league gets to say, we paid y'all more, stop asking for more. But you give up your right to a percentage of a pie just for a bigger slice today. So a smart alternative that protects, I would say, the league, or I should say the players, if the league grows or shrinks, is their pay, I believe, should be tied to league revenue percentages, not flat numbers. So if the league grows, you get more. If the league shrinks, yes, you take a little less, but so does everyone else. And you stay aligned with the league as partners, not as employees. And that's what the NBA players have. And it's why they win even when the league stumbles. So if the league collapsed and players took this four-time salary bump, they're stuck. No revenue share, no equity, just a one-time bag. It's like cashing out a lottery ticket and walking away while the people behind you get the long-term royalty checks. It's a smart deal, should protect you whether the league explodes or crashes. And this deal only protects the league. So, the smart move, the simple truth is the league survives if it grows. The players succeed if they're part of that growth. So the smart move is to build a system where both sides rise together, not one side cashing out while the other side gets stuck. So for the WNBA, lock in strong revenue sharing model. Example, 50-50, 60-40 split between league and players like the NBA. Protects the league from overpaying if revenue drops, but keeps players invested in growth. Offer flexible performance-based contracts, base salaries, bonus tiers based on ratings, ticket sales, and media metrics. And that keeps the salary keep the salaries fair but scalable. And then expand while the market is hot. Add new teams in the hot markets, right? And tie them to major media rights and local investors. More fans equal more income, equal more stability. Market the stars relentlessly. Let players become brands. Caitlin Clark, Aja Wilson, walking campaigns. Think WNBA powered by stars, not just WNBA come watch basketball already. And then for the players, he demand a cut of the revenue, not just a flat check. Don't fight for just a raise, fight for a share. If the league makes more, you make more. If it dips, you share the risk. And then you push for ownership opportunities, player investor tracks, retire player stock options, franchise co-ownerships. Let them buy in and not just playing, and then lock in better retirement benefits now. So then use this leverage moment to negotiate future pensions, healthcare, and post-care security. And you think like a business person, not just an athlete. And then you build personal brands. So with business ventures while playing, leverage the spotlight to secure endorsements, content deals, speaking gigs, and brand collabs. Don't rely solely on the WNBA paycheck. I can't say it more than enough. But let me know what you guys think. I don't want on a whole tangent. I hope you guys got some value from this video. And that no family, peace.